How's it going, everybody? It is Dennis, and we're back with a video after the July 4th weekend. Of course, I didn't post on July 4th. I was enjoying my time, and also I left a little message for you guys to also enjoy your time with your family, friends, or whoever you're spending July 4th with. And I hope that went well, being away from the markets for 3 days, actually 3.5 days, because the market closed early on Thursday. But we are back. We are back with another video, and we're back with another asset, with another purchase, with another investment. We're talking about MAGY or MAGY from Roundhill ETFs. Yes, I made another purchase, and I'm pretty sure I've hinted at this at the video before, talking about this purchase into MAGY or MAGY, the Magnificent 7 covered call ETF. Now, what is this ETF? It's another weekly paying ETF from Roundhill ETF. This one trades on their already ETF that they already have. It's called, I'm pretty sure it's MAG or MAGS or something like that. It trades on that, which follows the Magnificent 7. So they're trading on that. They're trading on their own fund, which has been performing quite well, actually. And this one itself has been performing quite well as well. The distribution rate is 34.89%. And before we even get into all the details, I love to always show you guys the transparency. This is my current position in MAGY. I'm sitting at only $684 allocated into market value into MAGY. It's up $2.93 or 0.43%. My average cost is 56.82, and I have 12 shares, and the portfolio diversity is only 0.86 at the moment. But I'm slowly adding more and more into it. And we're going to go and get into some little sheets I've created, and I'm going to start creating for the funds that I'm able to track. Because based on previous videos and previous comments, you guys want more details into how each of my purchases and shares are performing, and not just a grand total and estimate on how it's been performing. So we're going to get into that in a little bit. But looking at MAGY, they run similar strategies they run with all the other covered call ETFs that we've seen in the space, right? They sell covered calls on funds that they choose, or stocks, single stocks that they choose, and they earn income from that. I don't need to explain this to you. If you're already in the space, you probably understand how it works. If you don't understand how it works, there's plenty of videos that talk about it, as well as for more details you can find on their website as well. But let's go ahead and take a look at how it's been performing. This fund has been out since April 23rd, 2025, roughly around there. It's performed quite well. As you can see, it's up 8.61% just from share value growth so far. And of course, it is the reason for this because it came out in April. In April 2nd, we had the whole downturn due to the tariff day from Mr. Donald Trump, or President Donald Trump. And so from there, we've been rising up, of course, as the market has been going up itself, and we're up 8.61%. And with that 8.61%, we've also received dividends of $3.09 so far. Don't look at the 5.39%. That's just the estimate so far into the distributions. Of course, the real estimate percentage is right here at 34.89%. So we received dividends from this fund. It's like I said, the first dividend was in May because it started in the end of April. So the first weekly dividend was in May 9th. We got 47, 47, 27, 27, 27, 27, 27, 37, 37. So you can see they've been distributing quite evenly. So it does vary, of course. It went from 47 to 27 for a little bit, now up to 37, but it continues to distribute evenly. It's giving us a nice and clean dividend every single time, and it seems to be what their goal is, to stick to one number and trying to give it to us as much as we can. And when they are not able to deliver, then they lower it down to, as you can see, 27, 27, and they'll lower it down and keep it at that level until they can raise it again. So those are dividends so far that we've gotten. It's a quite new fund. There's still a lot of things that we don't know about this fund. It's new, but the most important thing to me, and why I chose MAGY versus something, let's say, like ALTI or YMAG, because, you know, YMAG and MAGY, they're both on the Magnificent 7, but YMAG is from YieldMax ETFs, and also pays a quite good amount more with distribution rate than MAGY with the 34.89%. But the reason I chose MAGY is because not only did I want to diversify away from YieldMax ETFs, since I have a lot of YieldMax ETFs already, as you guys may or may not know. AMZY, QDTE, TSLY, AMZY, and of course YMAX is what I own from YieldMax ETFs. So I already have a lot of their assets. I only have QDTE from Roundhill, so I decided, let me test out another Roundhill ETF as MAGY. Another important factor from MAGY is the maintenance ratio, which is sitting at 25%. If we take a look at ALTI, for example, which is what's blowing up currently right now in the YieldMax ETF space, the maintenance ratio is 40%. If we take a look at YMAG, The YMAX maintenance ratio is 25% as well. But like I said before, I'm trying to diversify away from YieldMax ETF a little bit and get some assets from different companies to see how they run their assets and how they run their ETFs and what performance they could give to us. But if we take a look at MAGY or MAGY, we can see that the beautiful part is this maintenance ratio of 25%. As you may or may not know, I use, of course, margin. When you use margin, you want to have a low maintenance ratio. So something like 40% from OLT does hinder that maintenance ratio, does hinder that margin buffer. So therefore, you want to keep it low. And therefore, MAGY was a great pick. You know, it gives you 34.89% return on dividends alone, plus that 8% that we've seen in share value growth. And if we take a look at, of course, the charts, because that speaks for everything. If we take a look at the charts on the 1 year, even though MAGY has not been open for 1 year and has not been trading for 1 year, MAGY is up 15.10%. The S&P is up 11.47%. YMAX, of course, outpacing them, is at 19.5%. YMAX doing great, especially currently, as you can see towards the end of the chart, it's going straight up. And QDTE at 10.65%. So QDTE underperforming all of these. But of course, MAGY is beating QDTE and it's beating S&P, but it's a little lower than YMAX. But if we take a look at the year to date, we can see that MAGY is actually beating YMAX, it's beating the S&P, and it's beating QDTE. QDTE once again at the bottom at 4.46%, YMAX at 11%, and S&P at 6.72%. So even with the late start for MAGY, it's still up 14.42% year to date, beating S&P, beating YMAX, and beating QDTE. We can also add YMAG into here since we did mention YMAG. If we will add YMAG into here and we take a look at the year to date, YMAG is only up 1.7% year to date. If we take a look at the 1 year, YMAG is up 8.82%. So YMAG underperforms QDTE, which is already a low performer compared to the batch and compared to the S&P in general, and it's underperforming MAGY. So that is why I decided to choose MAGY. We can see that the dividends are lower, the dividend percent return is lower than YMAG, but because it has that value growth and has that share value that it's able to hold, it's able to give us that 15.10% return. So once again, for someone who is using margin and is looking for a weekly paying position that I'm not intrigued by high yields. Sure, I could have went for YMAG and got the high yield, but I already have YMAX for that. I already have QDTE for that. I have the single stock ETFs for that. I have my option strategies for that. I don't need more high yield ETFs. There's so much you could really pick. I understand diversification is key, but it's even 37% that MAGY or 34% that MAGY is currently showing us as an estimate for the annual rate. That's fine by me. It's really fine by me. There's so many people have been spoiled by 100%, 80%, 70% returns, myself included. But honestly, talking in reality, 34% return is fine with me, especially when I'm able to hold share value and grow share value. We could also add OLT into here just for funsies as well and take a look at how OLT has been performing. So on the 1 year, OLT is up 15.88%, quite close to how MAGY has been performed in less time frame for MAGY to even perform. And also, of course, OLT beat YMAG, QDTE didn't beat YMAX and beat the S&P. So MAGY close to OLT has been out for less time and also has a smaller maintenance ratio. And if we take a look at year to date, OLT is actually not beating MAGY. MAGY is up 14.42%, while OLT is up 11.49%. So MAGY is outpacing all these other ETFs, dividend paying ETFs, as well as the S&P. And of course, it has share value growth currently with the market that we're in right now. Could it change? Yes. If the market stays stagnant, could it stop growing? Maybe. If the market starts trending downwards, will it trend downwards? Of course it will. But will it trend downwards as much as these other ETFs that we've seen? That's something we have to see. Currently, the market's on an uptrend, really strong uptrend on a bull market. So we'll have to see where that goes when we have those moments of downturns, which of course we will have. But enough looking at the charts, we understand why I chose MAGY. We've seen the results that it's been getting on the year to date and the 1 year with the limited time frame that it has. Let's take a look at what it has been doing in my portfolio so far. So taking firstly a look or actually before we even take a look at this, actually we could take a look at this first. Week 1 we had 12 shares. This is July. This is of course when I started receiving my dividends, was in July of 2025. Week 1 12 shares, week 2 12 shares. The reason the shares didn't increase from week 1 to week 2 is because they don't have fractional shares so far, so the dividends weren't reinvested back in, unfortunately. So week 1 12, week 2 12. We got $37.63 for week 12, $4.52. And then we got week 12, 38, week 2, 12 shares, $38.15 at $4.58 earned. And that gave us 1.38% growth from the week prior. To look into more detail, and by the way, this is a sneak peek into how I'll be creating most of my sheets now for some of the ETFs that I can track. And this is a prime example right here. So this is one of the sheets that I've been working on, not only for MAGY, but for AMZY, AMPLY, and other ETFs coming up. And it'll give me better access to do better breakdowns for you guys, so you guys can better understand how these ETFs have been performing based on when I bought the shares, how much shares I bought, for what price I bought, how many dividends they've paid out, everything of that source. I'm working on it. I'm making the spreadsheets the best I can, the easiest they could be, so I can use them myself. And if anybody else wants to use them as well, I'm willing to share that as well. But currently it is under construction. I'm still working on that, especially with this, as you guys will see right now. It's quite bland at the moment, but we're working on it, or I'm working on it. So on the 27th of June, I did a cash purchase, so my own cash that was laying in my portfolio. This is not reinvestments. So I did a cash purchase of 2 shares, $56.83 for $113.66. So far, of course, the time frame is very small, but so far the share value growth is 82 cents. In the total dividends per batch, or per batch of shares, so this is a batch of shares, 2 shares, we've had $1.52 paid for that batch of shares, and that's gained us $2.34, or 2.05% return so far on $113.66 that we bought. I also did another purchase on June 30th, cash, 10 shares, $56.82 share price, $568.20. That went up $4.20 or $4.20 of share value growth. I've received $7.58 on that batch from dividends, and we have a total of $11.78 total gain. That gives us a 2.07% return, leaving us with a total invested in cash or in reinvestments. Of course, no reinvestments just yet, but total invested in cash is $681.86. That value gain is it's $5.02. So we've gained $5.02 in value. Total dividends received is $9.09. And of course, total profit earned so far is $14.11. So that's with value gain and dividends received. Of course, value gain will fluctuate depending on where the ETF goes. So the ETF dips down, then of course that value gain will go down. It'll be in the negatives if it goes in the negatives. And if it continues to grow, then of course it will go into the positives. And of course, it will continue to fluctuate until we actually sell out of those shares. Now, looking at total return, this is the average total return is 2.06%, of course, because we only have 2 open positions. And the way I'm tracking all this, of course, we have our average cost, which is currently sitting at $56.82. Current share price is $57.24. This is live share price, or since the last closing. Since the closing of the market, it closed at $57.24. That's why we have that gain of $4.20 and 82 cents. And of course, this is how I'm doing my dividends. Of course, it's quite rough. Like I said before, this is a rough way of calculating dividends. I still need to work on this. Actually, my AMZY, down here, if you guys could see, I have an AMZY little tab. I'm not going to show that yet. That's going to be a video of its own. But the AMZY tab looks a lot cleaner, looks a lot better. But I'm still working out the quirks and features on how I'm actually going to calculate it, how I'm going to input the data. Of course, for weeklies, I'll have to input the data weekly. I'll also have to stack it differently. So from here, we could see it's from the earliest dates, or no, yeah, the later dates. So the 2025 May, and then we have the earliest dates now of 7 of July. So technically, for it to be easier for Excel, I'd have to flip-flop this over to where it'll be easier to track and just be able to scroll down the numbers. So I wouldn't have to individually go and input everything myself, and then move this down, input it on top, move it down. I wouldn't have to do that, because then I could just go down, and therefore whatever Excel stuff, Word spreadsheet stuff. I don't know why I'm explaining this, but in general, as you can see, we're purchasing into this fund. I haven't made any purchases so far since then. The reason being because, of course, my dividends currently for AMZY, APLY were okay. They were decent. Most of those went into YMAX, I'm pretty sure. I think, no, $100 went back into AMZY. The other funds are still sitting in cash. I'm still waiting to see what I'll do with those. We have TSLY coming up as well this week, and GUI. TSLY came in at the lowest it's ever been, but of course it's 65% return on the share price currently, so technically that is good. But if you purchase like I did a long time ago, it's quite a bad return. But hey, beggars can be choosers. Hopefully it trends back upwards when TSLY trends back upwards, if it does, and hopefully the premiums pick back up. But still, dividends are dividends. And GUI had a decent return. YMAX, it was okay at a 13-cent mark, and QDTE was doing good at 23 cents, I think it was. So should be good dividends coming in this week from those funds. So that means I'll have some income or some cash laying around my portfolio. Probably will throw it into MAGY. I diversify farther into MAGY. My goal, of course, is to stack YMAX. YMAX is currently sitting at roughly 14% of my portfolio. So is QDTE. So I want to slowly move those down to 10%. Of course, I'll still be adding back into them, but at a slower rate. And due to that slower rate of increase of shares, therefore, they will slowly begin to get less and less of my portfolio. So go from 14, 13, 12, all the way down to 10%, hopefully. And then hopefully MAGY does the opposite. MAGY will go up until that gets to roughly 10% of my portfolio. So then I'll have 10% YMAX, 10% QDT, 10% MAGY. I'll have 3 weeklies that are paying me weekly and are giving me good returns, hopefully. And of course, then I'll also have SPYI and BTCI in my portfolio that are growing, and of course JEPQ. So those are my main currently holdings, and that is why I'm choosing MAGY. That is honestly why I'm choosing MAGY, just because clearly you can see on the year-to-date and the 1 year that it's performing very, very well. You can't really lie when you look at the charts. It just performs quite well. Total return 14.42%. You take a look at the regular charts, even we have on the year-to-date 8.61% return just from share value growth. So the numbers don't lie. The numbers shows that there is growth so far with the bull market that we have. Of course, it's capped. I'm pretty sure the Magnificent Seven probably grew more than this, but it's trending quite close to how the market's growing. So that is good. And also, we're getting good dividends, right? We're getting good dividends. We have a return of 34.89%. So good dividends, 30 to 40% returns, annual returns from dividends. We have value growth on the shares. It beats a lot of the other ETFs, such as we saw before, beats ULTI on the year to date, beats, what else does it beat? Beats YMAG, beats QDTE, beats YMAX, right? Beats the S&P. If we take it the 1 year, of course, it's different because it has less time to play with. But still, with that less time to play with, beats QDTE, beats YMAG, almost beats ULTI, beats the S&P. So still a lot more we have to learn with this fund. Still a lot we have to look at. It's new. It's brand new from Roundhill ETFs. So we have to see how this actually works out, how this plays. It all depends, of course, on the Magnificent Seven and see how they perform. So hopefully those stocks, single stocks, continue to perform well. Google, NVIDIA, Tesla, everything of that sort. Hopefully they continue to perform well. And therefore this fund will perform well as well. So that is why I chose MAGY. Just a little video for you guys talking about why I chose MAGY, from anything from the dividends, from the margin requirements, and of course just the overall performance that we've seen so far from it, that shows that this could be ultimately a pretty good fund from Roundhill ETFs. And also because I need more diversification away from YieldMax ETFs, because I've been diversified very strongly into those funds, especially with YMAX. So diversing a little away from YieldMax ETFs, and as well as working, as you guys can see, on new ways to show you guys how my performances are going, not only based on overall estimated returns, but on concrete evidence on every single purchase, from shares to purchase price to cost to value growth, dividends, everything of that sort. So hopefully you guys enjoyed. Hopefully this is something you guys want to see more from me, the breakdowns of every single share and purchase price. Hopefully you guys want to, if you guys want to see that for a lot of my funds, I'm more than willing to do so. If I have the time, I'll put together the sheets, track all my funds, track how they've been doing, how they've been performing, so there's better data out there. better information out there for you guys to make better decisions. A lot more. What's the word for it? You can't say more. Can you say more educated? Nah, probably not, right? Well, make educated decisions, and just educate yourself further on these funds and how they could be performing in your portfolio as well. So anyways, thank you so much for watching. I'll see you guys, of course, next video, where we're going to be talking about AMZY and looking over our new little sheet that we've created for AMZY, and going back all the way to 2023 when I started purchasing AMZY, and how those shares have performed so far. So see you guys next week for the AMZY video. Thank you so much for watching, and hopefully MAGY does well. See ya.